Hello, welcome to the European Open briefing for Wednesday, November the 29th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar is extending yesterday's rebound on growing hopes that the Senate will pass its version of the tax bill. We did have a fresh missile test by North Korea, although this time around it hasn't managed to cause much upset in financial markets. There was only a very limited reaction to those reports. The main gainer this morning is the UK pound. It's up sharply on reports that the UK and the EU are very close to reaching a deal on the divorce bill. While in commodities, oil it remains subdued ahead of the OPEC non-OPEC meeting on Thursday, and we also saw a surprise build in US stocks yesterday. And it's worth mentioning that Bitcoin, the cryptocurrency, has managed to break above the $10,000 level for the very first time. Let's begin first with the dollar. We can see both dollar index and dollar yen pair are up, notably from those lows we saw on Monday when they hit a more than 2 months low. Dollar yen yesterday rose back above 111. It's currently trading around 111.50. The dollar index also fell to 2 months lows. It's now back above the 93 level. Yesterday we heard that the Senate Budget Committee voted 12-11 to advance the tax bill to the Senate floor for a full vote in the Senate. That could come as early as Thursday, although given that the Republicans have a majority of just 2 in the Senate, it will require pretty much the backing of all of the Republicans in order for the bill to pass. We're likely to see some further changes before the vote, but it is going to be a very close one. So although at the moment there does seem to be momentum in favor of the tax bill, it could still meet some hurdles down the road, which could potentially hurt the dollar. Also, yesterday we had the latest Conference Board's Consumer Confidence Index, which hit a near 17-year high in November. And we also heard from Fed Chair nominee Jerome Powell, who, similar to other FOMC members we've been hearing from this week, signaled a December rate hike at his confirmation hearing in Congress yesterday. And he also hinted that he favors some relaxation of financial regulation, and that boosted US banking stocks in the US stock market. So we are seeing a bit of a return to risk appetite, and that's also weighing on gold prices, despite the fact that we had another missile launch by North Korea. It's been reported that North Korea has conducted an intercontinental ballistic missile which landed into the Sea of Japan. That's North Korea's first test since mid-September. They have been quiet for some time now, but they seem to be back onto carrying out further tests, which this one North Korea is reporting that now they've achieved their aim of becoming a nuclear state, and now they have the entire US mainland within their range in terms of coming into range of missile strikes by North Korea. President Trump has said that he will take care of it, but so far there doesn't seem to be any other reaction coming from the US, and market reaction has also been fairly limited. We saw Asian stocks being starting the day negatively on the back of those reports, especially Chinese stocks. But Chinese stocks once again have rebounded very sharply just before the close, with the CSI ending the day CSI 300 ending the day slightly down, and the Shanghai Shenzhen Index, composite index, ending slightly up. Gold prices, though, we can see overall the main boost came earlier on Monday when the dollar fell sharply and there was some uncertainty around the tax plan. It's not too far from those highs, but doesn't seem to have any momentum for further gains in the short term. At least it's currently trading around $1,295 an ounce. Let's look at the UK pound now, because we did here late last night, we had UK newspapers were reporting that according to EU sources, the EU and the UK are very close to reaching the outlines of a deal to settle the divorce terms of Brexit. This comes after the UK has reportedly raised its offer of the divorce bill to around 50 billion euros. That's a sharp increase from the 20 billion initially being offered by the UK. We still don't know if we haven't had any confirmation of this, but it is looking likely that the final offer will be something closer to 50 billion. Also, a snap election in Ireland has been averted following the resignation of the Deputy Prime Minister. So that, again, one less complication ahead of the EU summit. Though the what to do with the Northern Irish border is still a sticking point in the negotiations. Theresa May, the UK Prime Minister, will travel to Brussels on Monday, December the 4th, to meet with European Commission President Jean-Claude Juncker and EU Chief Negotiator Michel Barnier to settle the outstanding issues. If it all goes ahead as planned and they manage to reach a deal, some sort of a deal, then Barnier will likely recommend that sufficient progress has been made ahead of the EU summit in December, and then the talks will move on to trade and transition deal, and that could further boost the pound, which today has hit a 2-month high of 1.3430 against the greenback. The euro pound has fallen to 2.5-week low of 0.8835, and we can see the pound has been recovering sharply after that sharp fall earlier in the month when the Bank of England delivered a very dovish rate hike. It's now more than recovered those losses and sets to end the month higher. Moving on to oil prices, we can see they remain near yesterday's lows. They're off those 2-year highs we saw last week. They came under pressure early in the week after the Keystone pipeline between the US and Canada restarted following a temporary shutdown, and there are growing doubts about whether OPEC and non-OPEC countries on Thursday will agree to extend the current upward deal. That was not that long ago. It was seen as a done deal. The fact that the upward deal, which expires in March 2018, will get extended by a further 9 months for the entire duration of 2018. That's not looking very certain at the moment. It's possible that we might see an extension of a shorter duration or smaller cuts than in the current agreement. So that's weighing on oil prices at the moment, and we could see some volatility on Thursday, depending on what OPEC and non-OPEC countries, mainly Russia, will decide. On top of that, we saw a surprise build in US crude stock inventories, according to the latest weekly API report. The official EIA numbers are due later in the day, and that's also weighing on the Canadian dollar, which is stuck near 1-week lows versus the greenback. But the main focus for Canada, the loonie, will be Canadian third quarter GDP and employment report on Friday, which could give some insight, some indication as to whether or not we will see another Bank of Canada rate hike in the near future. And finally, let's see what's happening with Bitcoin, because the cryptocurrency has broken above $10,000 for the first time in its history. The currency was founded in 2009 and has increased tenfold so far in 2017. That's mainly on the back of growing popularity for cryptocurrencies. There's no real fundamentals driving them at the moment, apart from just general interest in the blockchain technology which runs these cryptocurrencies. And the long-term potential of this technology. Bitcoin did receive a boost recently after major exchanges such as the CME and the Chicago Board Options Exchange announced plans to launch futures contracts. So all in all, it's looking very bullish for Bitcoin at the moment. We can see how far up it is from the 21 exponential day moving average. It's currently trading around 10,640. Although it should be noted that cryptocurrencies are very volatile. And finally, looking at today's economic calendar, we're going to have the Eurozone Economic Sentiment Index coming up shortly, as well as flash German inflation figures. The main focus, though, later will be US GDP, the second estimates for the third quarter, and we're going to have a number of speakers, including New York Fed President William Dudley at 13:30 GMT, Bank of England Governor Mark Carney at 14 hours GMT, Bank of England Deputy Governor Dave Ramsden as well, plus Fed Chair Janet Yellen, where she will deliver her semi-annual testimony before Congress at 15 hours GMT. That's it from me. Thank you very much for watching, and have a great day.